All right, if you're a climate tech founder trying to raise a Series A right now, you already know it is tough out there. So today, we're going to break down this harsh new reality. And more importantly, we're walking through the new playbook, not just for surviving, but for actually thriving in this new world. Let's get right into it.
And listen, it's not just you. That feeling, it's a real, widely shared experience. This quote, it just perfectly captures what founders all across the climate tech space are saying. The days of easy money, they're long gone. The goalposts have definitely moved. So the big question is, where exactly have they moved to?
Okay, so to really understand what's happening, you gotta look at the numbers. They paint a super clear picture of why fundraising feels so completely different right now. This isn't about hype anymore, not at all. We're talking about a hard reset of the entire market.
Get this, in 2024, total venture and growth funding in climate tech, it dropped by 14% year over year. That brought it down to around $30 billion. And, after the crazy highs we saw in previous years, that is a major pullback.
And the trend didn't stop there. The first half of 2025, funding fell another 19% compared to the first half of 2024. The message from the market couldn't be clearer. Investors have pulled back, big time.
And this chart really just tells the whole story, doesn't it? You can literally see the steady drop in capital being put to work over the last few years. Now look, raising money is still possible, but let's be real. It is undeniably harder, it's slower, and investors are way, way more selective than they were just a couple of years ago.
So, okay, what is the why behind all these numbers? Well, it really all comes down to a fundamental shift in what investors are actually willing to fund these days. Let's dig into that shift and see what the new set of expectations really looks like.
And this right here is the fundamental change. A Series A, it is no longer about funding another year of R&D. Not even close. Investors now expect that A to stand for one thing: acceleration. They're not funding experiments anymore. They are funding proven go-to-market strategies.
I love this slide because it just lays it all out so clearly. We've completely moved on from the old mindset, right? The days of funding potential and underwriting a promise, they're over. We are now firmly in the era of the new mindset, which demands proof and underwrites execution. Think of it this way. Your lab results, yeah, they're important, but it's your customer results that are actually going to get you funded.
And you don't have to take my word for it. Here's that new mindset straight from an investor. Alita Carbone from Impact Science Ventures, she just puts it perfectly. It is no longer enough to be a nice-to-have. What investors are backing now are solutions to urgent, unavoidable, hair-on-fire problems. The kind of problems that customers have to solve right now.
Okay, so given this new reality, it's no surprise that a lot of founders are falling into some pretty predictable traps. And these traps can absolutely kill a Series A raise before it even gets off the ground. So let's walk through the 4 most common mistakes, so you know exactly what to avoid.
First up, we have the technology first trap. You see this all the time. So many brilliant founders, they just fall in love with their amazing tech. But here's the thing, investors, they're falling in love with market traction. Your pitch can't lead with the technical specs. It has to lead with the customer's pain and your real quantifiable wins.
Second, there's the regulatory dependency problem. Whoa, this is a big one. If you're building a business model that only works if some specific policy passes or if a carbon price hits a certain number, that is a massive red flag for investors. Your core business has to work today under current conditions. Think of policy changes as a potential accelerator, not a life support system.
All right, trap number 3 is the scale later mentality. You just can't promise to figure out growth after you get the check. That won't fly anymore. Investors need to see that you've already built a repeatable, proven template for how you're going to expand. They're funding the scaling of that template, not its creation from scratch.
And finally, this might be the biggest mistake of them all. Networking only when you need the money. The best fundraising processes, the ones that actually succeed, are built on relationships that you've been cultivating for months, maybe even years. You need to be talking to your future investors 12 to 18 months before you even think about asking for a term sheet.
Okay, so we've covered the challenges, we've covered the traps to avoid. That's the bad news. Now let's pivot to the solution, the good news. Here is a clear, step-by-step, actionable playbook for navigating this Series A gauntlet and proving, without a doubt, that your business is ready for acceleration.
Think of this timeline as your roadmap to success. It doesn't start when you need the cash. It starts a year and a half out. That's when you're laying the tracks, building those key relationships. From there, you move into building real traction, then showing you can scale it, and then, finally, you package your story and run a tight, efficient fundraising process.
So what are you actually proving along this timeline? Well, it's this stuff right here. This is your checklist. Investors are looking for proof points like early paid usage from a very clear customer profile, real revenue or contracted offtake, a sales process you can do over and over again, and a credible financing plan to hit your next milestones. This is the hard evidence they absolutely need to see.
And again, here's a founder's perspective to really drive this home. Jamie Strachan, the CEO of Nabucco, he just nails it. It's not just about scaling. It's about scaling really fast into a huge market with proven margins that actually work. That right there is the new bar. I know, this all probably sounds pretty daunting, but it's so important to frame this new environment in the right way. These higher expectations, they aren't just barriers designed to stop you. They're actually guideposts for building stronger, more resilient companies right from the very start. And really, that's the main takeaway here. Yes, the bar for a Series A in climate tech is way higher than it used to be. No question. But it's also much, much clearer. The founders who are laser-focused on real customer traction, the ones who design for scale from day one, they're the ones who are still raising money and raising it well.
Look, the gauntlet is real. The challenges are real. But you know what? So is the opportunity. The world urgently needs the solutions that you all are building. So the final question is simple. Now that you know the new rules of the game, are you ready to run that gauntlet and build the future?